Good morning, folks. So I'm gonna be doing a trade breakdown on NQ, which is Nasdaq. I think I took this trade 2 days ago, so this is Thursday, and I'm gonna be breaking down the trade I took on Tuesday. So for the weekly time frame, where we're in, there's no much storyline on this weekly time frame. So, but if you understand the candle theory, not CRT. I don't trade CRT. I just trade what ICT teaches, and this is just the candlestick anatomy and whatever. So if you understand candlestick theory, me saying this candlestick theory is making me sound like one of these um, Romeo students, which I'm not. I'm an ICT student, a profound ICT student, not Romeo. So yeah, on the weekly time frame, we can see that price price failed to this candlestick the previous week failed to close aggressively above this high, right? Above this candle high, this bullish candle you can see here. So this previous week candle, this one failed to close above this candle high impulsively. It's closed almost as an inside day, just that this candle didn't have much wick, so we can't really classify the next bullish candle that closed as an inside day as an inside day. Are you with me? All right, stay with me. So that's that for the weekly time frame. Now when this weekly time frame did this the previous week, that's the previous week, which is last week, there is an internal range liquidity that we should expect price to draw to, which is this weekly order block. So this is the weekly order block, and this is the open of the weekly order block. So this is the internal range liquidity that we should expect price to trade into before heading upwards, taking out this draw on liquidity, the previous week's draw on liquidity, right? And also we want to know our range and the 50% of our range, which is from this low to this high. Now we are familiar with the concept that says price moves from internal range liquidity to external range liquidity, right? So price was far above 50%, and we needed price to retrace below, taking out sell side liquidity in order for it to push upwards. And the sell side liquidity we're going to be looking at are the ones that are below the 50%. And this now is for a bullish market. You want to sell above, you want to sell high above in premium, and you want to buy below in discount, right? So this is the analysis for the weekly time frame, and this was what I had my eyes on. And then on the daily time frame, because there's nothing much to talk about on the weekly time frame, so we move on to the daily time frame. On the daily time frame, we can still see that for this range there is a daily order block here. I like to mark my order block from the open. So this is the open order block, open, and it is below the 50%. Just ignore all of this you're saying. I'm going to explain it. That's where I did my I took my trade. Yeah, so just forget about that area. But I think I should, let me see if I can do something. Can't really do anything. So yeah, this is the order block, and it's below the 50%, which makes it a valid order block, right? And when I was on the chart, price had not actually formed any of these candles. So what I was left with to work on was this high. So this is a swing high that got taken, the swing high that got taken, and price I think price closed not necessarily below this imbalance to then define it as an IFVG. Price did not necessarily close below this FVG, at least not yet. So I think this was the day I took my trade on this long bearish candle, but the previous day had not closed below this FVG to then classify it as an IFVG, right? So why did I sell? The reason I sold is also because of this candlestick theory, not ICT, I mean not CRT. I learned my whole analysis from ICT. So I don't know, Romeo has just come online to start stealing credit. So whenever we mention candlestick theory, it seems as if we're trading CRT, which are not. So what happened was price had taken out this high, and closed below the wick of it. And now this is a good scenario of a reversal, right? A good scenario. Since price took this high and failed to close above, we would expect, right, the next candlestick to close lower, meaning we would want to see lower prices, right? So our target would be this candle's low. Okay, now for you to know that price is going upwards, the candlestick, the body of the candlestick has to continue to displace above the wicks. And for you to know that the candle the next day is not going to keep going up, the body of the candle has to close inside the range of the previous candles of the previous candle, precisely below the previous candle's wick, which is what happened here. All right, so I didn't trade here. This was Thursday. I didn't trade Thursday. In fact, I wasn't even looking at this market on Thursday. It was on Tuesday, this week's Tuesday, that I actually got on the chart. So I'm just gonna skip to that level. Now that was my confirmation on the daily time frame, right? So now the 4-hour time frame also gave me a good confluence. Yeah, this is the reason why I sold, because obviously on the daily time frame that we just finished looking at, there was no sufficient data to tell us that price was actually going to go here, because price could have done this, could have come here to this FVG and trade back up, right? Could have done this, come into this FVG, trade back up, taking out this high. So the reason I had the confluence of selling these days open, regardless of whether price closed below this FVG or not, was the 4-hour time frame. You know, the daily time frame was telling me that price was bearish, but that was not sufficient information, because there was no market structure shift, there was no displacement below the FVG to then make it to turn it into an IFVG, right? But on the 4-hour time frame, price provided us with more data, which was first this FVG, right? this market structure shift, first it was a CISD, which is a change in state of delivery. CISD meaning change in state of delivery. I'm just going to, well, CISD is change in state of delivery, or you can say a market structure shift, because this is a swing. Where is my MSS? Because this is a swing low, right? Let me go close. This is a swing low. You can see it. This three candlestick formation. One, a high candle, a lower low, and then a high. Another high that doesn't take out this high. So this is a swing low. When price closed below this low, it confirmed the trend. Alright, because this is a CISD, change in state of delivery, price changed, closed below this order block, and it also did a market structure shift alongside closing below this FVG. So there are just so many confluences as to why price began to sell, but obviously at this point I was not in the market, so price had already developed up until this point. So I'm just going to mark out the day I checked the market. So it was on Thursday. Okay, this is it. There's already a line there. So when price had done this, and yeah, remember this is the daily sell side liquidity, right? This one, you can see it. This is the daily sell side liquidity, that candle that I'm expecting price to go to. That would be my first target, and then the extension of it would be the 50% of the whole range. If you can remember the beginning of the analysis where I analyzed the weekly time frame and the daily time frame, I'm talking about the 50% of it. This is the 50%, is below the 50%, which is the order block. All right, now this is my first target and this is my second target, right? So I got on the charts and I saw this price had started creating lower lows and lower highs, lower lows and lower highs, respecting buy side and respecting sell side, no, respecting sell side imbalance, right? Respecting sell side imbalance. So I'm just going to take out this daily FVG for you not to get confused. I hope you don't get confused. So this is the first bearish FVG, second bearish FVG, and price kept trading downwards. Now when price came to this OB on the daily time frame, I got concerned because I didn't want price to come to this OB and then go to take out this. So that was a bit of a concern for me, right? But because of how the 4-hour closed, I had a strong feeling. Because of the bearish nature of the 4-hour, I had a feeling that it was still going to trade below. Because if you should look at it from just the standpoint, when price came to this low, I mean came to trade into this daily order block, this daily bullish order block, I wanted to wait for a market maker model to see if we're going to get a reversal, right? So if I had seen something like this, then I would know that, okay, we are now going to trade up to this draw on liquidity. If I had seen something like this on the time frame I'm looking at, so I want to see something like this on the 4-hour time frame. I don't just want to see a sweep of liquidity. I don't want to see this. And then I don't want to see this. What am I drawing? Let me delete this. So I don't want to see this. I don't want to see this. This is a sweep of liquidity. This is a sweep of liquidity, and say this is a what's it called? This is a key level. Say this is a key level, and this is a sweep of liquidity. But if this sweep of liquidity doesn't if the sweep of liquidity doesn't give me a sufficient displacement towards the upside, I'm still looking for sells. All right, and I want to see not this exactly. I want to see that price sweeps this when price sweeps this liquidity. I want to see that it also sweeps this liquidity. Right, I want to see that it also sweeps this liquidity that touched or that traded into the key level. I want to see that liquidity, that low that traded into the key level, get taken out, and then a good market structure shift before I buy. Right, for me this is not sufficient data for me to sell. I mean, for me to begin to buy. All right, so when this happened, when the 4-hour time frame came to this daily order block, and it first reacted, and this happened, and it traded below, and then it failed to displace, meaning it swept. This is now a turtle soup. It failed to displace below this previous range low. I waited for it to trade into this FBG, right? But then the rejection, the continuous rejection, you can see the first rejection, the second rejection, the third rejection, the fourth rejection, and even the fifth rejection. You can see how price just kept rejecting off this 4-hour FBG. You can see how price kept rejecting, and on the 1-hour time frame there was no sufficient data for me to begin to buy with. There was no displacement. You can see all these choppy candles and just rubbish. You can see there was no solid displacement. Price just kept chopping around, and after I swept this low, I just felt price was still going to come here, because you could see the impulsive move downwards, but then it's struggling to go upwards, and it's reacting off of the sell side imbalance, right? So that was also a confluence for me. And let me just jump onto the day I caught my trade. So on Thursday, I usually, after knowing where price is going to, I usually just go on the 15 minutes time frame. Or to be honest, I just go on the 15 minutes time frame. That was where I began my analysis from. But if the 15 minutes time frame is not clear, I go on the 1 hour, and then I go on the 4-hour time frame. All right. So this is the 15 minutes time frame. Let me go on 15 minutes time frame. This is Tuesday. Okay. Tuesday, where is Tuesdays? Let the Tuesday begin. Right here. I'm going to make this. So Tuesday begin here. Let me change the color to red. So yeah. This is where Tuesday begins, right? So for what ICT Asa does, he said, whenever we're expecting a bearish market, we should expect price to trade above the opening price. So for Tuesday, this was the opening price, midnight. That's the midnight open. So I'm expecting price to go above, to trade above, right? For me to begin to look for myself. Now, since that's my bias and this is my first target, right? This low here is my first target. I think I should take this off. And that low is my first target. Now, this is the immediate low on the lower time frame, so it's also a target, right? It's also a target. This is the immediate low before the day I'm trading. So of course this is the sell side liquidity. Since I'm expecting price to trade it down to this daily candle low, the any low that comes before that daily candle low is also a liquidity zone, right? So this is the sell side liquidity. And price opened here. This is the midnight open. I was expecting price to trade above so I can look for an entry in the premium to begin to sell towards my target, right? So on the 1 hour time frame, there was an FVG. This FVG, price traded into first this FVG that it was rejecting on, and then after trading into it, there was a CISD here. There was a CISD here, which is a change in state of delivery, or you could say a market structure shift. First, it was this CISD. Second, it was this market structure shift. Then price traded lower, but then there was this 1 hour FVG that had to be filled, and the right time for it to get filled. Let me take this off only. The right time for it to get filled was the day I decided to trade, right? So price came above, taking out the buy side liquidity. Now this is a buy side liquidity. Price opened, traded to take out the buy side liquidity, also filling in or offering fair prices, right? Filling into the FVG, offering fair prices. So when price did that, I knew that price was going to sell. Okay, I knew that price was going to sell, and I was going to and it was okay for me to sell. So yeah, when price did that, I exercised a lot of patience. You can see the candlestick theory also happening here, which is not CRT, by the way. You can see it also happening on the 1 hour time frame. I waited for a lot of confirmation. I used a lot of confirmation, and my win rate is also so high. So after price traded into this FVG, I waited for price to close below this FVG. The reason I did that was because I wanted to see that this FVG is displaced over, right? I wanted to see that this FVG is displaced over or through, that a candlestick closes below so that it can become an IFVG. And that was exactly what happened. Price closed below this, which was the first confirmation, then it traded below, which was the second confirmation, and then it also left an FVG here. Oh my god, what a good setup. So that was what this candle, this box, that's what this box is for. This particular box, that's the FVG that turned into an IFVG. Okay, so when price did all of this, I wasn't really interested. I was just waiting for New York session to happen because I didn't want to just get in on a choppy price action, so I just stayed away. Okay, and alongside the fact that there was an order block here, so I was waiting for any other thing that would invalidate this order block, and so I just waited for equities to open. Now this was the seven. This was when New York session began. 7 o'clock. I think it was this candle. Yeah. New York session began here. This is the beginning. New York session. So this is 7 o'clock open. New York session. It traded above, but there was no liquidity to take, so it did not take out any significant liquidity, right? So the 8:30, I used the 8:30 opening, right? Where's the 8:30? Okay, I think the 7 o'clock actually did take out a form of liquidity, because if you observe, it's engineered this liquidity, this high, because for you to sell, you have to you have to wait for a liquidity sweep. At least that's what I wait out for, or look out for. I wait for a liquidity sweep before looking for an entry, right? So you have to wait for a liquidity sweep. Whether you're buying or you're selling, liquidity has to be swept first. If not, you will become the liquidity. If you don't spot the liquidity, you become the liquidity. As simple as that. All right, this is black and white. um so price engineered liquidity, you don't want to be buying because price is not bullish. You're not expecting price to go up. I was expecting price to sell, so whatever sell side liquidity it takes is not my concern. My concern is for the buy side liquidity it takes, so I can look for an entry lower to send price lower. So price came, engineered this liquidity, and then came to take it out, but it took it out close to, I think it, oh yeah, it was the 8 o'clock. 8 o'clock had taken out this, and then the opening bell at 8:30, that's the New York opening bell at 8:30. This is 8:30 opening. Actually, it didn't do any significant stuff because New York had already swept liquidity. So I was just waiting for price to displace below this low with an FVG to confirm, to give me, because I'm already liking a price has taken out let me take this off. Price has taken out buy side already. Buy side. Price has taken out buy side liquidity, so I'm just waiting for an entry. Right? So I was waiting for price to displace below this low, so I can just look for an FVG if there's any, and so I can begin looking for shorts, right? And that was exactly what happened. But I was on the lower time frame when that happened. Yeah, I was on the 1 minute when that happened. So 8 o'clock open and it went above. I waited for price to, because this now becomes a breaker block. When this price when this sell had not happened, this was a breaker block. Alright, this was a breaker block. Look at it. It was a breaker block because price swept this low. Price swept this low. Price swept this low, right? And it displaced above this high. So this was a breaker block. So I was waiting for it to get invalidated, creating an FBG and as well displacing through this 5 minute CIM order block, creating a CISD and a market structure shift. Okay, I'll repeat myself. I was waiting for this breaker block to get invalidated, displacing through it and also creating a CISD, creating alongside it an FBG, and that was exactly what happened. All right. So that when this happened, I just marked out the 5 minute range. I marked out the 5 minute range, which is from this high to this low. All right. From this high to this low, and from this high to this low, from this high to this low, above the 50% is the 61%, and that was a good zone for me to take myself off. I didn't want to take myself off of this because of course I'll be losing money. I mean, I'll be losing out on risk to reward. It's so poor. Imagine I had taking a trade from that zone, and then my target is here. It's barely a one-to-one, right? It's barely a one-to-one, except I extend it to my overall target, which would then make it a 1-to-5. So I didn't want to do that, so I just marked out the whole range of my entry time frame, the whole range that formed when I was about entry, and I set my entry at the premium of it, which was the 1 minute invalidated breaker block. Which was the 1 minute invalidated breaker block. And you can see this is the 9:30 open. You want to work with time at every given time. You understand? Okay, you want to work with time at every given price. That's a cool line there. Yeah, so you want to work with time. This is the 9:30 opening here. It didn't really give any entry. Okay, I think it did. This is the first FVG after the 9:30. But I'd already taken profit. So it was the 9:30 that actually went to trigger me. So I'm just going to take this off. I've already done this. It was the 9:30 that traded into my area of interest, and this was where I kept my I forgot whatever. Okay, yeah, I remember this. It is above this whole zone. I kept my stop above this buy side liquidity and stopped by my mentor, Fair Value God. I learned a lot from him. Shout out to him. You can see that my chart looks exactly like his. Shout out to him. So that was where I set my stop loss, and I just targeted this zone. That was basically where I targeted. I didn't want to hold, but if I had held, I'd have probably capped at a 1-to-13 risk to reward. That's a good one. That's a really good one. But I just decided to close out here. But now, here's the bad news. I wasn't triggered. I think price was too volatile at this 9:30 opening, so I wasn't able to get filled in. The order got rejected, and if need be, if there's any need for it, I'm going to attach a screenshot to it. My friend is going to help me edit it's a picture, a thumbnail. But that aside, that was how I got about this entry. So it was from this range high to this range low. The above the 50%, which is the premium, I entered off of this invalidated breaker block stops above this high, and take profit that aligns with the 2 and 2.5 standard deviation projection. And that's for it. Now for this, I don't want the video to be too long, oh my god, I don't want the video to be too long, for which it already is. I'm just going to delete all of this. I don't want the video to be too long. If not, I'd have explained this. After missing this trade, I wanted to get in on another trade, but for me to get in on another trade, I have to use the macro. ICT thought on the macro, and the macro time frames are from. There are quite a few of them, but the one I used, which was the one available at the time, was the 950 to 1010. So this is the 950 and the 1010. And as we all know, there's something called the 10 o'clock reversal. So price almost always reverses at 10 o'clock. That's on NQ. I don't know about any other pairs. Price almost always reverses at 10 o'clock. So I waited for it to form and then for a retracement to happen. I think on the 5 minutes it's clearer. The 5 minutes. So this is the macro. This line and this line are the macros. So I'm just gonna delete this because I'm done explaining this. So this is the macro price traded into this FVG. Price traded into this FVG during the macro. So I was waiting for, after price did that, and came down again. The beginning of macro started, and then I was waiting for something to just get me in on the trade rather. So the macro happened, price swept liquidity, and on the 1 minute time frame price did this. For a safer entry, you could actually get in here if you were going to target this low. I think you could have waited for a less risky entry, which would be here. The stops would just be above this high if you want, and then you target this blue line because that was the whole projection. But based on the fact that I've been trading for a while now, I've seen certain things happen over and over again. I'm yet to be profitable. Actually, I'm yet to be profitable because I'm still struggling with some psychological problems. But when it has to do with technicals, I'm really good. Yeah. So this was all I needed. It was already 10 o'clock and this was 10:10. So when price was displaced below this low, taking out this high, this swing high, took it out again, created a swing high, swept it, displaced. I wanted to enter from here, but I was watching a movie, and before I could look, all these things had already happened. So my stops were above this other block and targets were here. So this would have been a 6.38 risk to reward under the 10 a.m. reversal, and trade was formed during the macro. Trade idea was formed during the macro. So that was it, and I was also looking to get in on another shot here. I was just trying to look for a way to get in on a trade, but obviously that didn't happen. That didn't happen before price took out my target, right? That did not happen. So that's basically everything I looked for. That's basically everything I looked for in this whole trade. And I'm sorry this is a long video, not too long, but it's a bit long. So yeah, that's all there is to it, and thank you for watching. I'll see you on the next one. Stay safe.